So what is up YouTube? In today's video, I'm going to be talking about how you can be investing as either a college or high school student. So my name is Akshar and I've been investing for around 5 years now. And I've learned many things and made many mistakes along the way, which I hope you guys can learn from. So before I talk about what you should be investing in, let's first talk about why you should be investing. So there's a concept called inflation where essentially over time, the amount of money you have will be worth less. So if you have X amount of money, the amount of goods and services you can buy over time will decrease. So in order to keep up with inflation, the best way to do so is by investing. And another reason is just to maximize the amount of money you can have, because just keeping it in a bank, the returns are very low as compared to other investments. So what should you be investing in? Now, there are many asset classes like you could be investing in, like stocks, bonds, commodities, which are like gold, silver. Now crypto is also being considered a commodity, and real estate. However, I think the best investment option for high school and college students is stocks, because it is liquid, meaning you could trade it whenever you want for cash. There's also like no set amount of money you need to actually invest in it like real estate. And historically, it has provided better returns than commodities and bonds. Now, to invest in stocks, you're going to have to open up something called a brokerage account. Now, this is essentially where you could buy and sell your stocks. Now, there are a few platforms I recommend you check out for your brokerage account, which are Charles Schwab, TD Ameritrade, Fidelity, Robinhood, Webull, etc. Now, I personally use Charles Schwab and I recommend it to you too. And now to essentially open up a brokerage account, you can just go to the App Store and download one of these apps. And then it'll kind of tell you how you can open up your own brokerage account. Now, usually they'll ask for some information like maybe your bank account details and social security. And from there, you could add money to invest. Now, one thing to note is that if you're over 18 years old, you can open up your own account. However, if you are younger than 18, then you are going to need parent permission, or you can open up an account with your parent. So the most common advice you'll get when it comes to investing in stocks is you just invest in the S&P 500 index fund. Now, the S&P 500 index fund is essentially a fund that tracks the top 500 companies in the stock market performance. So like Apple, Adobe, Tesla, Amazon, etc. And over the past 50 years, it did have an average of like a 10% return, which is better than 80% of investors who try to pick their own individual stocks. Now, by no means is investing in the S&P 500 bad advice. It's actually very good advice, because with very minimal effort, you'll be outperforming 80% of investors. However, I think when you first start investing, you should prioritize learning over your returns, because the mistakes you make now won't be as costly as the mistakes you make in the future. So I actually recommend you look at investing in individual stocks, because then you'll actually learn about why stocks go down and why they go up. You'll learn about earnings reports, management, etc. cycles, which is very important, because then it will force you to make more rational decisions. Like when you first start investing, you'll make very irrational decisions because a lot of your emotions are involved in investing. Like I remember when I first started investing, like whenever stock would go up, I would be happy, and whenever it would go down, I'd be sad. And I wouldn't really look at the facts. I would just always base it off on the graph, which would change day in and day out. So I think when you first start investing, you should try to learn as much as you can. And then from there, you'll make more rational decisions. And if then you want to take a more passive route, that would be great. Like you could go from investing in individual stocks to then going for an index fund. And I think you should also explore other investment options like options and short selling. Now, these are very risky investment options, but because you're investing mostly a small amount of money into these, I think losing it now won't be too big of a deal as compared to in the future, when if you do see like other people making money off options, you'll be tempted to do so, and that could be a much costlier mistake. And then you could kind of find out what investing strategy works for you, like whether you want to continue investing in individual stocks or index funds. And then you could also looking at other investment options like bonds, commodities, and real estate. So if you did enjoy the video, please do leave a like and subscribe. I will be making more videos on investing for beginners. So if you do have any questions, do leave them down in the comments below, and thank you for watching.